is way better than the last place. We've been able to do these streams with, I don't think there's been any problems. Just check something. StreamYard uh, X spaces. Later. Might change my streaming service. My broadcasting service is what it is. All right, good morning, guys. So yeah, am I streaming out? Yeah. Good morning to everybody. We've got GDP coming in on Thursday. Today is Tuesday morning. Today we do not have any particular special economic report coming out. Tomorrow we will have durable goods orders. Durable goods orders. I've got to remind myself, what the fuck is that? Let's go take a look. Let's all get reversed in what that is. Dun, dun. Durable goods orders refer to new orders placed with manufacturers for delivery of hard goods which are meant to last a long time. Okay, so like laundry machines and shit like that, refrigerators, stuff you buy, you know, technically like once in a long time. I don't think they group cars in with that, by the way. I don't think so. Let me just double check on that. Durable goods report includes cars. This can include things like furniture, cars, electronics, home goods, or sporting equipment. Yeah, yeah, yeah. So it does include cars. Demand for long-lasting products. Okay. Trucks, cars, refrigerators, televisions, computers, toys. Toys don't really last a long time. Firearms are included in that. Sports equipment, furniture, consumer electronics, and appliances. When I think of durable goods, I think of appliances. I think of, that section in like Best Buy. You walk over there and there's like, washers and dryers and dishwashers and refrigerators. But apparently it's also TVs, computers, just about damn near everything that's big at Best Buy and more and more. Well, what was this? Mediocrity is the touchstone of the average mind. Heretofore, unbeknownst to me and mine, join or perish. Oh, wow. Okay. That was Andrew Tate's dad said that. What was I about to do here? Boom, 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 boom. Yeah, just going to tell you that, we're doing good on the market here. How's everybody doing on the market? Michael, good morning. You guys, how you holding up? Are you trading anything? Are you sidelining? Are you getting destroyed? What's your situation? Give me an update. Let me know how my members are doing. Did you guys hear that? I think it's the NYSE is considering going 24/7. That'd be awesome. We've all been waiting for that for fucking ever. I think it's stupid that the markets close, and that would allow things to trade a bit more normally. When? I don't know. I think they're taking a poll and they're getting, it's a discussion soon. Uh, but I'm definitely for it. Look, a free market should be open to trade on whenever you like. Like, just because you go to sleep doesn't mean you can't have an order in for your shares to sell at a certain price. Like, it should be available for everyone to be able to sell what they have any time of day. Like, it almost seems socialist or communist to say that between such and such hours you cannot trade what you have. Like, you could have shares of, I'm talking about, like, real honest to goodness trades here, not just for as a trader, but like you're sitting on something and you need to liquidate it. And there's a buyer at 2 a.m. in the morning at a corner shop in New York City, and you meet them and they give you the money and you give them the certificate. You know what I mean? I'm like, who's the draconian motherfucker trying to prevent that? Look, an open and a free market needs to be open and free 24/7. That's my opinion. And then there's a lot of people who say, like, oh, but that'll make trading so hard and so difficult. Like a fucking, middle of the night, my orders get clipped. Evolve or die, motherfuckers. Like, get with the program. I'll take your place if you don't want to trade or if you need mommy to hold your hand. I'll take your place. Don't worry. So, but the proper way to do this is a 24/7 free open market. That's the way it should be. I mean, just look at crypto. Crypto's doing it correctly. It should be that way. Futures are even fucked because, they are down for an hour a day and then they're down for the weekend. Yeah. So anyway, my thoughts on that are, of course, like, why would you restrict anyone's ability to trade on a free market? It's not a free market. It's bullshit if it's not free and open 24/7. Your transaction should be able to go through whenever the fuck you want. That period. Anything outside of that is draconian police state. That's my opinion on it. Michael, you say doing well, just paper trading and learning still. Good, good. Okay. Taking it slow and easy, which is good. Well, maybe not easy. I don't know, you tell me. But these drops the last few weeks are perfect for you to, know that there's still plenty to learn because you get that, it's like a boxer. He's been training with maybe two different sparring partners, and then he's like killing it, right? He's figured them out. He's the master. He's at a higher level than them. He's kicking their ass, and he's feeling confident. So he gets out there. He goes fight somebody. He goes to fight somebody in the ring. He's fighting. 90% of what's going on is just like those sparring partners, and then something happens. Something that those sparring partners never did, and bam comes that fucking right hook or whatever it is, unlike anything that person experienced ever before. They thought they were ready. So what happened? How can one know when one's ready? And I can tell you this, you guys, you're not ready until you've gone through an entire cycle. Technically, you're not ready until you've gone through an entire cycle. And I'm talking about real estate foreclosures, and real estate crash. Then the real estate market starts to rebuild. A recession, a stock market crash, a bull market, and a bear market. Uh, Rate hikes and rate cuts with the interest rates, causing inflation. You need all that under your belt. And that takes like 7 to 15 years. Carl says, and divorce. Yeah. Well, you need, all this under your belt in order to know what's going to, what right hook is going to come when you least expected it. So that shouldn't stop you from learning, shouldn't stop you from trying, shouldn't really stop you from even trading and going forward with your plan. Um, but paper trading definitely is advised. And then when you do get walloped, turn it into a learning lesson. Don't just be like, oh fuck, this happens every now and then. Fuck me. And then continue. Figure out what happened, how it could have been prevented, how you could have acted faster, what you could have did to mitigate losses better. Figure it out. What was going on? Were you trading when you shouldn't have been trading? Were we in a bad environment and you shouldn't have had your risk out there? Figure it out. Cool. Yeah. I mean, it's not just that, Michael. It's Michael says, you mean watching the market and trading through all of it? Yeah. I mean, I just said that. Yeah. And but yes, that's what I'm talking about. You need to you need to know intimately like how stocks react. The cool thing about our methods is like, we're interested in 30 to 50 high growth stocks, every day. And certain periods we can't get in them, but we still see them and we know they're happening. We know what they are. If you're constantly scanning the market like that every day, and then you've got, the sectors you're looking at, and you're watching gold and you're watching oil and you're watching growth versus value, the difference there, and maybe small caps like the Russell, the S&P 500, the Qs, and the VIX. I mean, and the Dow. That's a pretty holistic, coverage of the market. If you did that for one complete cycle, one complete economic cycle, you are super duper well prepared. The problem is if you're only doing part of that, if you're not looking at sectors, let's say, that whole time, and you're not even watching the VIX, you're not looking at the dollar, you're not looking at gold, maybe you're not looking at oil, or didn't pay attention to real estate, and you go through that whole cycle and you've got maybe 3 out of 15, things that you should have been paying attention to covered. Well, when that cycle starts up again, you're going to need to add those other things. You don't have the experience and understanding of how those other things react. And so it is a good idea to be very comprehensively covering everything so that you can get over that 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 event horizon of understanding sooner, because you're going to wish you did. And then, like, 7 years from now, after 7 to 10, after you get through a cycle, sometimes they could be short. 4 years, you could learn everything. That'd be pretty rare, but you kind of have that almost right now because you had the pandemic, and then, maybe 5, 6 years, 7 years. If you could, from the pandemic to like 2027, probably you will have covered just about damn near everything. And you want to know, like, does energy go up during Fed rate hike times, or is it because of inflation, and how is that affecting real estate? And what's the foreclosure market looking like? Uh, it can be as learned as you want it to be. And the thing is that the next time around is the next time around, and you kind of want to be not waiting to go through it again. I've done that. I've been through, I want to say, 3 cycles now. Dot-com boom and bust. That was like basically 2000. Okay, good, Michael. Yeah. And then Foreclosure crisis, the whole thing, the collapse of the banking system and all that, 2009-ish. And then this pandemic, 2020. I mean, that completely fucked up. That created a whole cycle. And then here we are. We're still in pandemic recovery right now, effectively. Like Frankenstein is dialing up the different things on the knobs and shit, and it's not over yet. Like all that money printing they did, all that debt printing, oh, that caused all that inflation. And every time they send money to like Ukraine or anything, we send money wherever it is, we're printing that. That's I mean, number one, it sucks because it's from our taxes. So but not really. It's literally debt, but it's being can be paid back from our taxes and GDP. But they're literally causing inflation every time they send money out because it's debt. Anything external like that, when you send money outside of the country, becomes debt to the domestically, causes inflation at home. And so, it wasn't very much. What did they do? 100 billion just recently? I mean, it doesn't sound like a lot. I mean, it is a lot, but it doesn't sound like a lot compared to the whatever amount of trillions of debt that we're in. But it is actually a percent. It's a nick. Like, 100 billion out of a trillion is 10%, obviously. So, out of 3 or 4 trillion, we're talking about 1 or 2%. So every time they do that, I mean, they're causing inflation to have further pressures. And that's why we're seeing some of the inflationary moves that we are. Really, Michael? Oh, absolutely. Look, what happened you've got to backtrack this all. What happened during the pandemic? Number one, there was a market crash. Number two, stimulus checks. Remember that? Oh, and the lowered rates, you know, made sure that were kept flat and stimulatory. And we got the economy, started to get back in order again and everybody started working, but there was a lot of work from home. And then inflation happened. The inflation happened because of all of the money printing and stimulus that was done. That was a massive problem. Like anyone like myself who understands how inflation is created, not a lot of people do though. But anyone like myself who understands how inflation is created knew that when they did all that money printing, we were going to have a massive inflation run coming up. And the thing is, if the Fed doesn't raise rates higher than inflation before it peaks at any point, inflation becomes runaway inflation. It can't be kept at bay. You have to come over the top of it and push it down. And they not only did they not really raise rates aggressively enough in the beginning, but they waited a few months too long. So they were slow to react and they caused a huge inflation problem. It was just terrible. And so that was from the pandemic. Okay? Remember? That's how that all started. So now here we are talking about now we'd like to lower rates back to normal again. That's from the pandemic. So we're still fucking around with the Frankenstein, still fucking around with the knobs from the pandemic. Like doing everything they can to stabilize this economy. That's all from the pandemic. Yeah, absolutely. We're still recovering from COVID. Yep. Economically from the effects of that. We're now we're trying to recover. We're in the last uh quarter of the whole thing. Yeah. All right. Well, listen, the market is doing something interesting this morning. I wanted to show you guys. And that, see how we had this drop and then we had a really strong drop and then bounce. And that was yesterday, and as predicted, a doji day. But today we're opening up in the wick, and that could create another doji day up high on this red candle, up high up here. Well, we had that. That was the beginning of that whole run back in November. That was the beginning of the second bull market run that started in November. We had that same pattern right back here. Drop, drop, and we had, huge drop, dun, 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 huge drop, dun, dun, huge drop, and then doji, and then the next day, today, doji at the top of the range of the red candle, and then the way I interpret these things, the pattern that I see here in day trading and in swing trading is you take the top of the red day, and as these things inch closer and closer, eventually they break out of that. And I call that an inner shelf pivot signal. And that created this signal here that I gave everyone. And I actually said on a day like today, on this one, that that could be the case of what's coming. I didn't even see the future. Okay. But I knew that if this is what's going to happen, it could create a possibility that this is the lowest prices we're going to see for a long time to come, and maybe we push back up to this high after that. That's exactly what happened. So I got us in on this day to things. Things were signaling, setups were signaling. And then the next day there was even more, and it still hadn't taken off yet. And then everyone else, you can go back to the gurus and the furus, they got in here on this day. We were like all good, we're fully allocated already. So we have that kind of situation today, but the only problem is if you're going to allocate into anything, what should you do? You guys are, should be getting good at this. If you're going to allocate into anything, what's the worry? Yeah, the world events could cause another one of these drops so easily. So number one, you've got the choice of maybe just don't allocate. But what if a giant bull run starts off of this low down here? We don't know, right? What we do know is that if that's true, that it's going to be riddled with here and there little world event drops, though. So it's going to be a little bit different than that last one we just saw, where everything was clearing up and all things were looking great. And then, boom, let's go. Well, maybe we want to go here, but we've got Tesla after hours earnings reports coming in. We've got all kinds of earnings reports coming in, which might paint a very nice picture and cause a bull run. This earnings season could be positive. And if that's the case, then this is a little shelf situation going on here. This inner pivot shelf situation is back. And here we are sitting right at doji near the top of the candles. And maybe we're going to get something like this. And then, let's see, today's Tuesday, and then Wednesday, and then GDP. What if it's this? Then we have the exact same signal I was just showing you. And so we have today and tomorrow to get into anything if we, want to risk it. And the only way I would allocate right now into anything is if it was hedged, is what I was getting at. If you're going to allocate your capital, you better hedge your capital against drops. So you need to be doing beta weighted deltas on your portfolio and on your positions so you know how much QQQ puts will cover uh, you know, catastrophic moves on the market, which are probably going to happen. I don't think anything's really changed with regards to the global stage right now. You tell me. I mean, the closer you follow those things, the better off the more informed you could be. But as far as I know, I haven't heard any word that any of these situations around the world are suddenly improving. Maybe there's some ceasefire talks and all that. Those are always temporary. if you've been through those before. They almost always are temporary. Actually, they're always temporary. Like, it never ends. And that's the other thing, is that while you're trading and not thinking about Israel, Hamas, China, Russia, Ukraine, Taiwan, whoever else is involved, um, they are. Like, every moment that you're focused on trading and not thinking about all those things, they are all planning their attacks. So it's literally just a matter of time before we get a red blip, a red day, because those tensions are out there. Once you've got world peace, you know, then you just, you know, wait for world peace to be broken. But at least that's a much better stasis to be in. But the stasis we're in right now, you can expect difficult red days due to rising global geopolitical tensions. You can expect them, like in your trading. Whereas when there's not and everything's tranquil, you might be able to go a year or two or three without worrying about that kind of stuff. But that's not where we are right now. So it makes it a lot more difficult. But all right, so let's see. Today I think everyone's going to be waiting for Tesla, and then everyone's still waiting for GDP on Thursday. And so we're going to have, as I predicted, yesterday was an average volume day. And what I'm predicting is that each subsequent day up to GDP is going to be lower and lowish or very average volume. But that is not to say that there might not be some setups worth getting into. Just if you do get into something, you're gonna have to be hedged. And I mean, Tesla's going to move the market. We've got a bunch of other important ERs coming this week. All right, the market opens in like 10 seconds. Were you guys able to hear that bing, bing, bing through any of the microphone system or Zoom there? I was curious if it shares that audio. All right, the market is open. You have before. Oh, interesting. Okay. So we're opening in the wick of yesterday, up near the top of the red days range the day before. And this is called the wick play. Price may go back down to about to fill a little bit of this gap into the body or into the close of yesterday and then fly. Where that stops, nobody knows, and it might come back, and then that creates a doji on the day. That's probably the most likely scenario. But there is some tradable, range here. But for the most part, we're trying to just be careful with our capital. Hmm. Getting slammed on cart. Something's gone wrong on cart. What's up there? Okay, well, it's just a strong down day continuation on cart, and we'll see if there's any recovery there, or if I have to cut it midday or towards the end of the day with my PCS on that one. Let your rules take you out of your positions, and if your rules are keeping you out of getting into positions, then eventually you'll be all out and you'll be all in cash. Okay, yeah, the cart thing is stabilized now. JP Morgan also going the other way for me because was shorting it, but it has recovered. So I'll just follow the rules on that though. Now, if you look at these lists over here, you can see that we're about 65%, about 2/3 green from the open. That's great. And AFRM is up 6% from the open, so it is running hard. All right, well, it's got earnings in about a month, but it's been in this great descent, which I've been in, and it doesn't really pay to go after something with an expectation like that. So no trade there. IQ is another one popping right now. No. Mara, CLSK. Looks like all those Bitcoin related stocks are doing quite well. MSTR about to do earnings. Not really seeing like a perfect setup coin. Spotify, I think their earnings are coming up this week. Okay. Spotify had earnings today, is having, okay, I think Spotify had earnings this morning. Yes, surprise. Investors cheer premium subscriber growth and profit bump. All right, so Spotify has kicked it off with a surprise in earnings, and there's the possibility for a never look back at 300, a never look back PCS type trade at 300. I'm going to go look and see if it's profitable, if it's a profitable prospect, and then maybe I'll add that. That should be independent enough that it would hold up against problems on the market. All right, the 300 is a 38 delta. We don't need that, so we can go down to the 280. The 280's volume today has only been one share traded, but it has 228 open interest. It's only been one share traded, so the bid ask spread is quite wide. The bid ask spread is really too wide on the June 21s, just too wide. Anyway, what would it pay? Let's just take a look. $1.76 out of 10 dollar spread. So it's 176 divided by 184. What out of, sorry, 824. 21% return on a 21 delta. So it's right on the cusp of being okay. But on top of that, the liquidity is not that great. So we don't touch it. And there'll be reasons for that. Probably half of the time, the reason why any of those trades um, are not giving you the best uh, quality for all the different parameters you like your trades to have with those credit spreads, 50% of the time is because it's not a situation that would have been good anyway. Any good lottos this week? Yeah, that's a great question, Carl. I thanks for reminding me because I'm going to be trying to look for them. But I'm probably only going to be going after any of those big market movie type ones. So Tesla. Anyway, what about with a CCS, says Michael? With what? With which stock? Take a look at Tesla. So Tesla's been hammered down, hammered down, hammered down. It is quite depressed and down. So if Tesla were to have a positive surprise, in addition to people who would want to get in because they thought, shit, Tesla's, uh, you know, only been bearish, you'd have everyone who's covering their shorts also. So you get double fire, double kindling on the fire. You have covering of shorts, and then you have people wanting to get in who didn't think it was the moment. And so this is a kind of situation here over on Tesla for a lotto call going into earnings into after hours. But that's only if it provides a financially comparable, what is the word? A financially viable option for you in the options. So going over to the option chain, I'm taking a look at it. 3 day to expiration call, lotto calls. You'd want to get up above at least this other pivot here. So like 180. Let's see, the 180. Oh, that's only like $16. Okay, so that could be really good. $16. Another pivot that could be useful to break is 160 or 165. The 165 is only $75. So the 165 or the 180s or anything in there, no, probably either or, those could potentially become good lotto calls by the end of the day. I think that even though the Greeks would start to cause some of the prices to go down as we approach those prices not happening, the rise in volatility in people willing to buy options on Tesla could probably keep those premiums pretty inflated. So $17 and $75 for the 180 and the 165 calls, respectively, on Tesla could be a possible lotto call at the end of the day. And it'll be interesting to see how those prices change towards the end of the day. HL and Para, let's see. We're basically looking for like beautiful opportunity here. So if you know any, let me know. So Para, I'm going to go through these stocks. Alcoa, BLY, SBSW. Isn't that Smith and Wesson? No. Okay. Chewy Coin. Coin almost is set up. Go back to Clean Spark. Clean Spark looks good, but entry was a couple days ago. The conditions on the market were definitely not such that you would want to get into that. So it's perfectly fine to have not gotten into. PAAS. No. CC. Duolingo. Moderna. Moderna looks pretty solid as far as how it's been holding up and tightening up and everything. It's got earnings soon though, so you couldn't really get a PCS on it. And also well, it's usually a slower stock, but actually it's 4.5% ADR. So that's good. It's also been holding above the 200, which is very nice. So Moderna is kind of nicely set up, but it's probably going to end up being a trade after earnings are released. Nordstrom. Yeah. The reason why, I mean, just so you can understand my reasoning here, the reason why we don't like Nordstrom chart, even though it is nicely resting, is that drop right there. It was too much retrace drop. And now it's tightening up, and that can create a nice upside inner pivot breakout. But it's just that we don't want it with this per se, with that big drop right there. And that was on ER, and it's a sign that things are bad. 4.5% ADR on Nordstrom. It's pretty crazy. Very volatile. GCT. GCT looks a bit better, but this is more for like high growth swing trading with shares. not so much with the PCS. And the reason for that is because it's kind of too new of a move. So the options are hot when things are hot, but when things go bad, they could get real dry and illiquid, and it's going to affect the bid asks. It's going to affect the quality of your trade there. See what else we got on the list here. Duo. Did I look at Duolingo? Yes, I did. Rivian. Wow, Rivian's just dying a fast death. DC FSL First Solar, FSLR. No, we want these things to be just nicely set up. Robinhood looks good. I can dig Robinhood, but one of the only problems with that is it does not have 24 days runway until earnings, has 16. That's not enough time to gestate unless you're a possum. IPF. You guys can look that up. Possum gestation, shortest of any animal, any mammal. Shortest gestation period of any mammal. 8 days. That's fast. ENV. Wait a minute. What was this? Oscar. This one's interesting. And anyway, not enough runway to get in, but this one's interesting. And 6% ADR. What's the move off the bottom here? 300% in 100 days. 84% in 21 days. This probably qualifies on our holy grails, doesn't it? Let me see. Got to be in there. I bet you one of these days, one of these moves was 100% in less than 30 days. How about this one? 108% in 29 days. There you go. Found it. So Oscar is a holy grail, and I'm putting it on our hot list. No idea what they do. Oh, it's biotech related. Um, but yeah, pretty decent movement for high growth stocks there for you. Probably not on the liquid side of things on the options for credit spreads, but for anyone who does shares trading on high growth stock trades, that could be good. Norwegian Cruise Lines, SLG, NXT. I just checked. GME looks terrible. Uh, okay, a couple other tops on the list are DHR with high relative strength on the market. DGX. Whoa, what did I just do? Why did it? Oh, there we go. DGX, KMB. Looking for things that are up though. GL. Oh, good lord, that's a dead cat bounce. LH. These are the top RS stocks on the S&P 500 this morning. SMCI. Too big of a drop lately, and then a little blip of recovery. Bio. TMO. Thermo Fisher. UPS. Watt. All right, and then sizzling. Spotify supposedly is quite sizzly. Yeah, that 300 never looked back, or it's like 298.50. Still looking good. I'm gonna take another look at Spotify's options and see if we can maybe get that now. Maybe the options are getting more, they're tightening up and getting more, a little bit more liquid. The 280 still only traded one and 228 open interest, and the bid ask spread is like 20% wide. That's not terrible. It's actually close to about 18% right now. That's not terrible, but we did see it pretty bad earlier. And this is supposed to be one of the hottest days on Spotify. So it's not a great sign. That's the 280. The 300 has only, 300 has traded 255. We're just, if you just look down the columns for open interest and volume on your own systems, you'd see that the volume is not very nice. The bid ask spreads are a bit too wide, and it's just kind of like not doable over there on Spotify, which is, you could only figure that out by going right into the detail of things, because from the outside it's done already 17,000 volume option trades today, which is giving us the idea that it should be pretty liquid. But we're going into the 21st of June contracts, and it's just not liquid enough. Oh, look at that. The 280s now have one more volume. So while we were talking about it, the 280 PCS on Spotify got a little tiny bit more liquid. Well, that's what I was seeing anyway. And now, oh yeah, the bid-ask spread is tightening. Yeah, that's probably looking like more of a prospect now. I might, nah, I'm not going to pull the trigger on that. It's still a little bit too illiquid, even on the bot option that you'd have to put together. The only alternative would be to get the 31st of May, which is a weekly, and those are usually much less liquid. And yes, they're extremely less liquid. I mean, I'm talking 100 to 1 less liquid. That's really bad. And that's usually the case. Well, all right. We'll keep looking for opportunities throughout the day. I think this should tell you that since we really couldn't find anything to get horny about, that whatever move this market makes, and it is moving right now, just might not be worth it, you know. So just keep, holding on to your positions. But boy, is everything turning green. This is something, I'll tell you. Look at this on the um growth lists here. Look at all that green. We are like 90% green right now off of the open. I wish I could find some better opportunities and better setups, but they don't exist. Let's see if we can just cover a few more. Hubs, Dell, couple, there's a couple more. Let's just take a look. Nope. Dell. Dell's in a little bit better shape, but it's not signaling. We would need it to be signaling. APLS. No, that's not set up well. Jimmy Dell, YPF, VNO, INSP. No, INSP. No. Let's go to some of the bigger names. We all obviously we know that their earnings are coming up, but let's just see what they're looking like. I know Microsoft has been looking great. Ooh, actually, some of that recent fall has created some good prices on Microsoft, but we got earnings in like 1 or 2 days on Microsoft, so we're gonna stay away from that. And Intel is coming this week. Very depressed. AMD, Nvidia, Apple, Netflix. That's just looking down more lists now. United Airlines. Sats didn't look too bad. United Airlines flying. I mean, literally is looking really great. Donald J. Trump making the list as far as it doing well today. Nvidia Palantir. JD, that's Chinese stock. Wouldn't trust it. Uber, if I were you. SMCI, CPNG. Fellow trader was saying good things about this one. Yeah, high type flagging and everything. Yeah, but this is just the first move of it doing so, and I'd be just highly cautious on that. RVMD, yeah, Biomed, MedSnap, Dick's Sporting Goods. Oh, that one looks okay, but just okay. What the worst problem is that it failed to hold its good earnings release. So that's not good. Palantir Kava. Kava has runway, but it has failed out a bit too much, not set up. So that's very interesting to me, is that there's just not the setups out there to back what's happening on the market. That's not to say that maybe this isn't the bottom of something that's about to happen, but I would remain cautious for the fact that setups are not looking too great, and maybe it's going to take a week, maybe it's going to take tomorrow, maybe it's going to be fast, but I would wait for things to shape up on the setups and the way they look, so that we can err on the side of reliability, probability, and things working out in our favor until we start risking capital. We got plenty of time. Get the whole year. So, all right, you guys, I'll see you back in the group. Thanks. Have a good morning, everybody, and stay safe out there. All right.